MTN's Nigerian unit has reported a significant turnaround in its bottom line. The business returned to the green in the March quarter and posted a profit after tax of about 15.3 million rand. That improvement comes as MTN grew its subscriber base by just over 8% to 84.1 million. CEO Carl Toriola says this performance places it on the path to restoring profitability and achieving a positive net asset position within the current financial year. Despite persisting macroeconomic uncertainties, Toriola says the group is encouraged by the relative stability of the naira during the period, along with the moderation in inflation. Glencore's posted a steep decline in copper output in the first quarter, but it's maintained its 2025 production guidance. Output on that end dropped by 30%, with Glencore citing lower ore mining rates and head grades. The miner and trader says the first quarter is expected to be the lowest and that a significantly stronger performance is anticipated over the remainder of 2025. Sibanye Stillwater has called on the National Prosecuting Authority to clamp down on illegal mining, which it says is harming investment prospects. The group witnessed its highest number of illegal mining incidents in more than a decade last year. It's noted 540 incidents and nearly 1,500 arrests at its South African gold operations. Sibanye says the scale of the problem requires a change in policy, and it's therefore called for a reworking of the Precious Metals Act to comprehensively criminalize illegal mining. According to Sibanye, in many cases, illegal miners are charged with minor offences such as trespassing, which carries a maximum fine of 2,000 rand, imprisonment not exceeding 2 years or both. Datatec's expanding its reach. The ICT company has been admitted to the OTCQX Trading platform in the US to broaden international investor access. That platform allows companies to share their home market reporting and uses a US dollar quoted share price. In international news, Samsung Electronics dropped its business outlook for the current quarter and warned that US tariff policies could cut demand for its key products such as smartphones. Let's take a look for more detail.
Samsung has dropped its earnings outlook for the coming months amid global trade turmoil. The South Korean tech giant said Wednesday that US tariffs could cut demand for products including smartphones. It also said it expected its key semiconductor business to face greater uncertainty. The world's largest memory chip maker reported a small rise in first quarter profit as customers rushed to stock up before US tariffs kicked in. Operating profit hit just under $4.7 billion, up 1.2% on a year earlier and in line with the company's earlier estimates. Earnings at its mobile phone unit jumped almost a quarter, helped by the launch of new AI-enabled handsets. Shares in the firm traded roughly flat following the numbers, in line with the broader market. US President Donald Trump's so-called reciprocal tariffs threatened to hit hard in countries including South Korea and Vietnam, where Samsung makes many of its products. Though the levies have mostly been suspended until July, the company says it's thinking about relocating production of TVs and other goods to reduce the impact. AI continues to be a headache for Samsung, partly due to US restrictions on sales to China, a key market. The firm has also struggled to supply high-end silicon to US AI chip champion Nvidia. Local rival SK Hynix has streaked ahead in that market, last week reporting a 158% surge in quarterly profit as a result.
And Volkswagen said it expects profit margins this year towards the bottom end of its forecast, while Mercedes-Benz pulled its earnings guidance for 2025 amid uncertainty over the impact of US President Donald Trump's tariffs on car imports. Here's more detail in this report.
Volkswagen and Mercedes-Benz became the latest automakers to sound downbeat over US tariffs on Wednesday. VW now sees its annual operating profit margin closer to 5.5% at the bottom end of its previous projection. That follows a 40% drop in earnings in the first quarter, hit by factors including a struggle to make profits on sales of battery electric cars. Auto companies were initially hesitant to factor in the impact of US President Donald Trump's erratic tariff policies into their forecasts, but that has begun to change as the costs of the trade war weigh on first quarter results. VW said its outlook still didn't factor in the impact of tariffs, but the carmaker added that challenges over trade and geopolitical tensions meant it was reining in its margin guidance. Mercedes-Benz saw its earnings before interest and taxes fall 41% in the quarter. It too pulled its guidance for the year and said the ongoing trade war would hit margins. General Motors and Stellantis also suspended forecasts for the year, while Volvo Cars withdrew its forecast for the next 2 years. Porsche said on Tuesday that tariffs led to a hit of close to $114 million in April and May alone.